So in my most recent analysis on ticker symbol SMCI, I told you guys that if the stock could stay above $50 per share, then look for a run to $55. And if the stock could get above that level, then look for a run to $58.30. Take a listen. Now to the upside, if SMCI can stay above current support, then I want you guys to look for a 6% run to $55 per share. And if the stock can get above $55, then look for a run to $58.30. Now last week I gave you guys my overall bearish stance on ticker symbol HOOD. Robinhood. And despite being bearish, I told you guys that if the stock could stay above 143, then look for a run back to 152. Take a listen. To the upside, if Robinhood can stay above current support at 143, then I want you guys to look for a 4% run back to 152. So looking at the current chart, you guys can see that Robinhood did end up staying above support at 143. And as a result, we did end up seeing the stock push back to 152. Now last week on the NASDAQ QQQs, I did warn you guys about this bearish rising wedge pattern. And I told you guys that it was quite similar to this one right here, which as a result did cause the NASDAQ to sell off dramatically. With that said, despite Friday's drastic pullback, the NASDAQ and the S&P 500 is currently recovering. With the NASDAQ QQQ is currently up over 2% and the S&P 500 up over 1.5%. Now let's jump over to the VIX and take a look at the 4-hour time frame. So currently what I do see forming on the VIX right now is a bear flag, which means if we do see a breakdown, both the S&P 500 and the NASDAQ QQQs could end up going higher. However, I'm still bearish, looking for a pullback down to 495 and then a pullback down to 450 on the NASDAQ. And for the S&P 500, I'm looking for a pullback down to 574 and then a pullback down to 532. Now, despite Friday's pullback, Tom Lee says that there are a lot of reasons for investors to remain optimistic. Take a listen.
Markets bouncing back after Friday's drop. Joining us now, Tom Lee, head of research at Fundstrat Global Advisors and Fundstrat Capital CIO. Tom, just summarizing what your thoughts are this morning. I don't see a whole lot that has shaken your confidence that the market's headed up. You still see 7,000 on the S&P by year end. You do point out it's not cheap, up 36% since the April lows. You do outline some headwinds, but I think you're outlining more positives than negatives for the markets, even right now.
Yeah, in fact, I think JP Morgan's announcement today really ties into why investors should stay pretty constructive on the U.S. I mean, JP Morgan, the biggest and the most powerful bank in the world, is investing $1.5 trillion into the U.S., into things that are going to strengthen sort of U.S. advantages, critically important areas. And at a time when the U.S. is dominating AI, and of course now we have this big tailwind as blockchain is an initiative that Wall Street is building products on. So I think there's a lot of reasons for investors to stay optimistic. And I know there's a lot of talk about bubbles, but I think the thing I would just continue to point out is NVIDIA trades at around 27 times forward earnings. It's still on a PE basis cheaper than Walmart and Costco, which trade at around 47 and 34 times forward earnings.
Now, going into the rest of the video, I have some important levels for you guys to watch on ticker symbol AMD, Advanced Micro Devices, NVIDIA, ticker symbol NVDA, and Broadcom, ticker symbol AVGO. Let's begin with Broadcom, ticker symbol AVGO. So currently Broadcom is up over 9%, breaking above resistance at 252. With that said, this is going to be our new level of support. So if Broadcom cannot stay above 352, then I want you guys to look for a 4% pullback down to 340. And if 340 breaks, then we're looking at a pullback down to 329. Below 329, the bear's next target is going to be at 315. And from current price, we are looking at a pullback of over 11%. Next, we have NVIDIA, ticker symbol NVDA. So currently, NVIDIA's main level of support is going to be at 183. If the stock cannot stay above this level, then I want you guys to look for a 4% pullback to 180. And if 180 failed to hold that support, then we're looking at a pullback to 176. Now, if NVIDIA breaks below 176, this could send the stock all the way back down to 172. And from current price, we're looking at a decline of 8%. 7%. Now to the upside, as long as NVIDIA can stay above 183, then I want you guys to look for a continuation of 1% to 191. And if the stock could get above 191, then we're looking at a run to 195. Above 195, the bull's next target is going to be at 203. And from current price, we're looking at a return of over 7%. Now, if I go ahead and remove all those support and resistance zone, what I want you guys to see is that NVIDIA is inside of a bearish rising wedge pattern. And if you're not familiar with this pattern, it usually plays out like this, which could send NVIDIA's share price all the way back down to 160. Next, we have AMD, Advanced Micro Devices. So current support for AMD right now is going to be at 214. If the stock cannot stay above this level, then I want you guys to look for a 7% pullback down to $200 per share. And if that level breaks, then we're looking at a pullback down to 184, which from current price would be a decline of 14%. Now to the upside, as long as AMD can stay above this zone, which includes the prices between 218 and 210, then I want you guys to look for a 10% run to 239. And if the stock could get above 239, then look for a run to 248. Above 248, the bull's next target is going to be at 258. And from current price, we're looking at a return of over 19%. Alright guys, if you like today's video, go ahead and leave a thumbs up. And if you're currently watching and you're not yet subscribed, do consider subscribing. As always, thanks for watching, and I'll see you guys in the next one.